Hello, guys. Brian here from quantlabs.net. I just wanted to go through over the last 36 hours. Been working on a new bot based on trend. If you've been following me, you know what I mean by trend. And the entries and everything looks good. Just trying to bring up the win ratio to about 60%. It can go as low as 37%, but it comes down to the timing of when the markets go down. I've talked about this many times in previous months. When you have overall general downward pressure on the crypto markets, right now it's been pretty strong, but it comes in waves, and you will over a 24-hour period hit modes where the markets can go negative, and they can go negative not hard. It's more up than down. But what I'm finding is when that happens with the downward pressure, you get more trades that lose, and then that skews on your win-loss ratio down. So I'm trying to lower that as much as possible and at least try to keep it above 50%, ideally 55% win ratios. In terms of weight allocation, it's all the same. So they're all, every single trade or bet, what we call it, is going to be in 10 tether US dollars. So doesn't matter about the quantity. It's really comes down to the win ratio, because it's the win ratio that will determine your P&L overall, and you want that to be obviously positive. So you need to have your win ratios of at least higher than 50%. I've also included a condition that will allow more trades to happen when the weighted average moves up. Meaning, when I say weighted average, I'm now measuring not 4 but 5: Bitcoin, Bitcoin Cash, Litecoin, Ethereum, and Ethereum Classic. That's been very accurate in terms of quantifying where things are at in the markets. I've added in Ethereum Classic because that can be somewhat a defensive coin when everything else goes down. But usually, if the markets look good, one of those 5 will do well. And I've had instances all year up until 3-4 weeks ago where they would all move negative and strong negative. And that's why I'm like, well, should I diversify outside of crypto when this happens? That is yet to be determined. I just think it's better to focus on the strategy I'm working on right now is somewhat momentum based, even though I didn't think it would be. But I do have somewhat a mean reverting strategy. So that's how you can diversify, is by having a mean reverting strategy that just maybe focuses on the futures or the higher, bigger volume coins like Ethereum and Bitcoin, and some of the other better performing, long-term performing coins like Chainlink, let's say. So that's how I'm planning to diversify. I have a strategy out there that is mean reversion, but right now I just want to get this one strategy down right, and to at least to 55% consistently, and only when the trading conditions allow. So that's pretty well what's being worked on. It seems to work really well when it works well. But as I said, when the markets start to tank and those big 5 I mentioned start to go negative, then you're when you're dealing with the smaller the smaller, lower volume altcoins that perform, that you probably never heard of, like OMG or something, they can go negative very quickly because you just don't have the volume to establish a really decent support level or a floor to keep the price stable, at least when you take on positions. So that doesn't exist. So you have to trade in the right trading conditions for this to work. As it stands right now, that's what's being worked on, and hopefully I'll be able to show this with better results, better P&L. And the other factor you got to consider is commission fees. Some of the profit levels are pretty razor thin when you look at the profit level. So it's hard. Well, it's not hard to calculate the percent or the commission on Binance, but this type of strategy would not work on any other type of exchange. Coinbase is too high at 1.5. Binance is at point 1. percent. So Coinbase is 1.5. Other exchanges are higher than Binance. So Binance does have the lowest commission for that. So it's just factoring that in the next step. The other good thing is with these sort of strategies, because they are really built for the spot market. I'm hope I'm not seeing figments of my imagination, but leverage is in the spot market. So if you can consistently get like 55, 60% win ratio, you could start adding in leverage, but that's way down the line. But for sure, if you can use the same type of strategy in the futures market with the same trading rules, you can definitely apply leverage there and go maximum when it allows. I'm also current about with the experts out there. We'll just leave them at that with options. Options is a new thing coming down the line. Futures, I know I did the futures Binance webinar on Monday, last Monday, showing some of the capabilities of it. There's just so many advantages with it compared to traditional U.S. regulated commodities out there. So that's the direction I'm going. I'm going to stay focused on crypto. But I just wanted to make this video to let you know what's going on, and that's pretty well it. And I've got loads of momentum-based strategies. I probably got about 7 or 8 strategies on the Wingding. But the next big phase is to really start working on the mean reverting, even though momentum is the place to be. And I've also confirmed one of the guys can do market making on Binance, but I can't. I'm still trying to understand that. But BitMEX is the place to be to do that, supposedly. But that exchange seems to be dropping off quite a bit. Other than that, just wanted to let you know, and we'll talk to you later. Thanks for watching. Have a good day.